days of the days of investing in a VC fund that's not using artificial intelligence to do all these blue checks of 200 different checks, you probably should not trust the numbers that they're showing you.
Right.
And you won't be able to judge it until the DPI is done and done, and you measure yourself what you wired in and what you got back. And even then, your slide rule is probably not as good as the artificial intelligence tech to measure any of the stuff.
So the interesting part about this is there are really like three different blocks within accounting, fund accounting, that everybody cares for, and nobody really pays much attention to it. The first block is all the fund statements. So you have the LP statements, you have the GP statement, and the fund statement. That's the first block. The second block is all the distribution notices and the capital call notices. That's the second block. And the third block is all the financial statements. That's your balance sheet, cash flow, and P&L. Now, if you look at all these three different blocks, these numbers, they all need to kind of tie into each other in some way, form, or fashion, right? So they're all kind of interrelated to each other, and that's the piece that the core IP that we built is basically around those. So we ensure that these numbers don't go out of whack and everything is in place, and we call that our blue check. Okay, that's something that we're calling it. So think of it as a Carfax report. So before you buy a car, you really want an independent third party to go check your vehicle to make sure it's not a lemon and nothing has been modified and everything is compliant. So it's a similar thing. So what we have done is we have taken our effort to basically run about more than 200 different checks across all these different statements, ensure all these things tie out. Now comes another very interesting piece. Now, besides these financials, you also have all your LPAs. You have amendments to LPAs.
Hello and welcome to Fireside with the VC. My name is Andrew Romans, and today we're with Rajesh Gopi, who's the founder and CEO of Zive AI. We do a lot of podcast episodes with VCs and founders, lawyers. This one, if you are a venture capitalist, you should pay careful attention to this episode. I think it's very important as well for a venture-backed CEO, but anyone who's out there who runs a fund, who's got to deal with the admin, who's dealing with LPs, who's looking at all the metrics of their fund, this is an extremely important episode, even down to how much money are you paying per year for tax season, and what is your total technology stack for how you stitch together everything to manage your business in a more digital, less Excel manner. So Rajesh, thanks so much for coming on. Why don't we start off with you explaining at a high level, what is Zive AI and what do you guys do?
Excellent. Okay, thank you, Andrew. Pleasure being on your podcast today. So the problem that we are really solving is for VCs and managing partners like yourself. The big three items that, in our opinion, that are top of the list for you is how compliant and risk-free is your fund instance? How are you able to measure and track all your investments? And how are you being able to get all the information put together for your LPs to ensure that your entire fund has been operating flawlessly? So at the end of the day, that's really what we are trying to address. Today, what happens is most of the VCs are using outdated spreadsheets. There is no login for anybody to log in to see what is going on with the fund. A lot of the calculations are outsourced to accountants who basically you pay by the hour. There's no back and forth in terms to ensure the accuracy of your statement. And overall, your entire fund is at risk of not being compliant with the LPA, which is a contract that VCs are signing with the LPs. So these are all massive friction points that we noticed, and I have personal experience with that as well. And Zai was really built using some of the new AI technologies that's out there to prevent any of these problems happening, eliminate all the friction that VCs might have, and ensure compliance and risk-free fund administration. So from a high level, that's really what Zive is all about.
Okay. And for full disclosure, I met Rajesh quite some time ago and then got to know him over a period of time. And then he finally convinced me to start putting my 4 VC funds and our 75 SPVs onto his software platform. And I have to say that I always spend too much time on admin, but I tell myself I love admin. I actually give myself a pep talk before I go into like a multi-hour admin session because trust me, that's not the deal I want to be making, right? That's not what I was put on
Yeah.
the earth to do. And even with other systems, there's a certain level of stress, down, zen. Like I consider my accountants almost an extension of my family because it's so important what they do to make sure everything is done right. But the truth is, those other systems are making mistakes. I think, the GP has got a lot of control over what the date they stick in to calculate the internal rate of return. Time value money is heavily affected by the date you put in. And what's the document that shows that this investment is up by 36x? Is that based on their revenue, or is there a document I can click into to see signature from like General Catalyst funded this after us, and this is the share price? So it's pretty interesting on the Zen side of digitizing it, but there's also the money side I found compelling. I mean, maybe explain how Zive AI's technology impacts the work that needs to be done by an accounting firm to service a VC fund like or a VC firm like mine that's got 4 funds and 75 SPVs, and there's going to be more funds in the years to come.
Yeah. So I'll give you some background about why I arrived at this particular interesting problem. So that'll answer this question. When I used to be a venture partner for a VC firm that was managed by one of the biggest fund administration platforms out there, and we always had a lot of challenges to get the numbers to match because we had an internal spreadsheet that we were tracking these numbers, and this particular company also had their numbers, and it was a constant fight at the end of the quarter to see where the numbers basically went awry. And it turned out it was basically completely manual. It was spreadsheet driven. It was plugging a number in some cell in some tab and then running calculations off of that. So imagine the fund manager filling this information and knocks on his table and flips another number from 0 to 5, and now all of a sudden everything is incorrect. And it took us 15 months to go fix the problem. That is the crazy part of it. We just didn't know where the problem was happening, and it took us like 15 months to find and root cause this. So the insight that I picked up from that 15 months was we can actually compress the entire fund administration to the journal entries from the accounting standpoint. Once you get the journal entry correct, then everything else is flawless, and we can spit out all your financial statements, all your capital statements. Everything can be driven off of that journal entry. So that was a core insight that we picked up, and we built the entire Zive on that thesis. So get the journal entry done properly. Once you get that, everything is automated. So the unique thing we'll see about Zive is that we don't use spreadsheets. There are no spreadsheets on our platform. We just create journal entries, and once the journal entries are done, instantly all the documents are there. You can give it to your tax person, you can give it to your audit person. They have everything completely validated. All the formulas are there, and just make the life easy for the VCs. That's a big difference between us and anybody else that you'd see.
Okay, so from there's a couple different perspectives to consider this from. There's the perspective of the GP who's running a fund, a guy like me. There is the perspective of the LP that's investing in a fund, or maybe he's investing in multiple vintages with the same VC, multiple different funds to keep track of. And then there's a perspective of the portfolio company that's also sharing information in a digital basis with some other platforms and even paying money for that. So from the VC, what are the core value props that you see offering Zive compared to
Yeah.
other legacy platforms that do give a login? It's not all spreadsheets
Yeah.
that are giving logins to their LPs at a minimum, and it's generating reports and making quarterly updates, semi-annual updates, annual updates a bit easier.
Yeah, so the big difference from our platform is the instant closing of the books. The moment we sort out the journal entry, like there's no more. You don't have to wait for 45 days before you get a report out to your tax person for them to spend another 2 months to get the K1s out, and normally you kind of file extensions. With us,
And
our
can I
funds
just
from.
step in for a second? So some of our listeners, haven't founded or run in a VC fund, may not know what all these things are. When the way a VC fund works, so we understand what Rajesh is talking about, is that we raise money from limited partners. They provide this cash. Of course, I'm a limited partner in my fund too, so I wire my own cash into the fund. And then after we have custody of that money, we wire money to the startups buying stock in these companies and building out these portfolios and put more money in some, and then there's money coming back in exits. At the end of every year, we have to create a financial statement for each LP, and we have to send them a K1, which they hand to their accountant for their tax returns. So an LP cannot really file their tax return without the K1. And it's quite common for, in the United States, tax day is the middle of April. You start hearing from your pesky LPs, by February, March. And a lot of GPs are procrastinating on this exciting admin piece of the job that they dreamed of doing their whole lives. And they're quite slow to provide the information to a normal accounting firm to generate the K1. And the accountants are like, hey, I'm here all 365 days a year. Why do you only harass me in the middle of March? And it's like tax season and really tough. So we actually have historically worked with our accounting firm, and you know them, Rajesh, starting on October 1st. And so they get all this work done. And then it's just like a little update, a little update, a little update of an LP came in, we made an investment, any change to all these ledgers,
Yep.
And then so we prided ourselves that our K1s come out in January. So our LP does not have to file a tax extension because he's invested in a fund that wasn't giving him the K1s. So good delivery of K1s is part of being a good VC.
Yep.
And there's limitations of how much money you're paying your accountants and everything and all the systems you're using, and trying not to make a mistake.
Yeah, and the fund is a breathing organism, right? So you have an LP might have committed $10 million, but they've only wired $2.5 million. So that impacts a lot of the metrics that are coming out. And you're investing in portfolio companies, and their valuations are changing over certain quarters or maybe once a year. And all these numbers kind of are very dynamic. They keep changing. So imagine what happens without Zive. Like, you're always constantly trying to find this information to get it accurate. That's really where a lot of the VC spend time. But with Zive, you are hooking up. You hook up your bank account, you hook up your QuickBooks, and then it's just magic. It just instantly sorted out. There's no more manual work from your side. The documents are right there, and December 31st, you print out your statements, and your tax person is off and running. So we've even made it simple for the tax and accounting team to not spend any more time trying to reconcile statements. It's already reconciled. It's all good to go. They just need to double check, make sure it complies with whatever is needed from their side, and then just push the docs over to the tax authority. So we made it so simple and eliminate all kinds of friction.
So if you think you're good at raising capital and investing it and helping the portfolio companies, and you don't think you're the greatest at spending time with your accounting firm, my reality over a few decades of being in the venture business is that my accounting company sends me a spreadsheet with a whole bunch of like, this is still outstanding, this one's been sorted, and it's a lot of back and forth. It's a
Yep.
lot of back and forth, and you know, I don't think they're necessarily using technology to check, does the starting balance of the financial statement for each one of my LPs and each one of my SPVs and each one of my funds, does the starting balance match the ending balance of the previous financial statement? This kind of work is just challenging for a human to do and deliver that high quality service at a reasonable competitive price. So the notion of having technology coming in is just incredibly advantageous. So I want to move over to the perspective of the LP and the founder, but the underlying portfolio companies that we invest in. But talk a little bit about tax. So where's the handoff between where Zive AI operates and the accounting firms Because I think you've got clients in like Israel, Europe, Canada, United States. You're dealing with lots of different jurisdictions on the GP VC side as well as the LP. Where's the handoff between you guys and the tax people?
Yeah, it's for us. Like we filed taxes for like almost all our customers from last year, and it is very simple actually. So we have all the documents ready for the 1065 filings. The tax person comes in, extracts the relevant information about the fund, and he just goes and files the document. So we've had companies in Israel, US, Canada, Singapore, India, and nobody has come back to us saying, okay, we are missing XYZ for any particular jurisdiction. So everything is already on the platform, and we've taken careful attention to not grow our business too early, because we work very closely with all these different customers from different regions, made sure we captured all the requirements, we kind of built everything into the tech stack. So now it just makes it easy for them to have everything ready made, so magic happens for them.
Okay. So let's switch gears and talk about this from the LP perspective. I think that I've seen VCs in different countries increase the share price that they've invested in, not based on the methodology of they invested in a company at a certain pre-money valuation, they wired this much cash, there's a share price. So it's like the cash divided by the share price is the same number. And then later, another VC invests at a higher valuation and the share price is up. And we're measuring share price to share price and saying, if we wired $1 million, the fair market value of our $1 million is now 3.8 million, and eventually this. And then eventually there's a distribution and a sale on secondary IPO M&A, and no more TVPI unrealized gains, paper gains, but actual wire distributions that's ultimately measured in the bank logs, that you're talking about, money in, money out. The key punchline is that I think the LP should now have a higher standard that they hold the GP to, that I'm not allowing you to play with your Excel spreadsheet and tell me that my LP investment is up 10x on paper. Yep. When perhaps that's not really true.
So the interesting part about this is there are really like three different blocks within accounting, fund accounting, that everybody cares for, and nobody really pays much attention to it. The first block is all the fund statements. So you have the LP statements, you have the GP statement, and the fund statement. That's the first block. The second block is all the distribution notices and the capital call notices. That's the second block. And the third block is all the financial statements. That's your balance sheet, cash flow, and P&L. Now, if you look at all these three different blocks, these numbers, they all need to kind of tie into each other in some way, form, or fashion, right? So they're all kind of interrelated to each other. And that's the piece that the core IP that we built is basically around those. So we ensure that these numbers don't go out of whack and everything is in place, and we call that our blue check. Okay, that's something that we're calling it. So think of it as a Carfax report. So before you buy a car, you really want an independent third party to go check your vehicle to make sure it's not a lemon and nothing has been modified, and everything is compliant. So it's a similar thing. So what we have done is we have taken our effort to basically run about more than 200 different checks across all these different statements, ensure all these things tie out. Now comes another very interesting piece. Now, besides these financials, you also have all your LPAs. You have amendments to LPAs.
And just to clarify, an LPA is a limited partnership agreement. Yeah. And then you have like operating agreements for LLCs, limited liability corporations, which are, common as well. And this is basically the like contract between the LP and the GP of, we're charging a 2% management fee flat across 10 years, or we're charging a front-loaded 3.5% management fee in years 1, 2, 3. Then it lowers to 2, then it goes to half of 1%. Whatever is written in that LPA is like the law. And I think that
Exactly.
the real world of spreadsheets and bank things, I'm not saying people are Bernie Madoff, but the LPA has not been perfectly in compliance with the behavior of cash coming in and out of the fund. Even, the LP's got a capital call. They're supposed to wire their next bit of money. And I find myself chasing them around.
Yeah.
I mean, this is the real world.
Yeah, I think what really happens is, so to your example, right? The limited partner agreement might call out, say, a simple example, a 5% management fee for the first 4 years and zero beyond that. But on the fifth year, somebody forgets, because this is like now a 5-year-old fund. Either the accountant forgets or the GP forgets, and but they still charge the LP 5%, right, and the management fee, and the LP is not paying attention either. So now everything is kind of out of whack. So for us, it's very important that the three blocks that I talked about matches what's in the LPA, and many times there are amendments to LPAs that might change some of these numbers around. There are side letters where some LPs within your fund will get special deals, so you got to be compliant with that. Then you have subscription documents, you have capital call notices. So the point being, like, from a fund standpoint, there are so many aspects that sit outside of the fund in the form of contracts. So the entire compliance of the fund is dependent on how all these different documents match with what is actually being presented to the within the fund and to the LPs. So to your point about what are the perspective from an LP standpoint, we make sure that the LPs are receiving documents that are 100% compliant with everything that has been agreed to between the LP and the GP. That's a big significant piece of work we have done. So imagine what happens with an LP that works with an audit firm that is ensuring that they're receiving all the statements on time. So they're also spending cycles outside of all the work that the GP and their accountant has done to cross-check the work that was done by the accountant and GP, right? So there's a lot of effort and time and money that is being spent just to ensure that everything is compliant, and somebody is always double-checking, cross-checking. So for us, a system, an automated system with a lot of AI, you can train it to go do all this work, and you really don't need to go spend time, money, and energy to do check and triple check and quadruple check. So we are pretty much eliminating those pain points, even from an LP standpoint. So it's not just your LP, even your future LP. So let's say you are setting up your fund five, and your potential LP wants to know, hey, okay, Andrew, what did you do in your first three funds? Where are all the documents that you say you invested? How is your number X multiple? So what's the backing for that? We show that. It's very easy. They just log into our platform, they click a button, we tell them exactly what the breakdown was on a deal by deal basis. So and that's really what our platform does. Like, it's so easy when you think about it, but nobody has kind of solved the problem or tackled the problem with the approach that we have taken.
Okay, so a lot of what we're talking about so far is almost backward looking into the past. So after the LP agrees to the limited partnership agreement, the LPA or the operating agreement with the GP, after the VC has collected money from capital calls, after the GP general partner has wired money to the startup. What about using Zive for the GP, guys like me, the venture capitalists running the fund, to use Zive AI to think about future and the next investment and portfolio construction and running the business moving forward?
Yeah. Yeah, I think what you really care for are three different items, right? So you want to construct your portfolio based on whatever is your thesis for the next fund. The second part is you want to market your fund to potential LPs, and this is again a very easy way for you to share your entire portfolio across not just your funds but also your angel track record. You can pull all that into our platform. You can pull all your SPV track record, because that's also very significant to demonstrate to potential LPs what your capability is to pick winners. And once you've done that, you need some sort of a CRM system where you're tracking all your potential LP leads, taking them to the pipeline, and then getting them to wire the money to your next fund. So what you really want is like an all-in-one platform where everything can happen at one place rather than having 15 different logins and sending your LPs multiple logins to again, that's all friction points that is basically preventing you from quickly closing a deal. So for us, those are all the important problem statements in your journey as a fund manager trying to raise your next capital that we have gone and addressed. So that's one piece of the pie. And once the money is wired, then you get into a fund administration product.
Okay. And you know, what you're describing with angel investments and SPVs, this is perhaps particularly interesting for someone who's an emerging manager, whether you're leaving a big fund and trying to branch out and start your own new fund, or if you're going straight up the mountain, launching your first fund based on your angel SPV track record, or that's still significant among, after maybe your first commingled VC fund. Okay, let's switch gears again and look at this from the founder perspective. So, we've got about 100 portfolio companies. What about for 7BC's portfolio companies? What does Zive AI mean to them, and how would they interact with it?
So there are two things for a startup founder. Okay, so one is equity management. That's your cap table product, and all our customers get access to, or the portfolio companies of our VCs on Zive get a free access to our cap table platform. And the
Okay, so
cap
so
table,
right now, let's stop there. This is news. This is kind of like a news flash. Most of our portfolio companies are spending money now on another system, and you're
yep,
saying that they could lower that expense, tip into profitability, decrease their burn by getting a better AI driven system than what they're paying for today.
absolutely, yeah, because this is very important. Okay, at the end of the day, for us, the value proposition is how accurate is the data that can be present to the VCs and their LPs. So for us, it's a loss leader for us. We have no problem making it completely available to the founders. We'll even onboard their existing cap table is very easy for us. We just drag and drop the files, and the entire cap table is stood up. And the beauty of this product that we built is you can model out your future capital raises. So that is something that does not exist in other platforms. Other platforms allow you to do one round of modeling and it just stops there just because of the technology limitations. But with us, you can build out your future rounds. You can do your what happened in Series B and Series C and Series A. You can
Yeah.
build your waterfall very quickly with our product. And you can do all kinds of interesting things with what happens if there's an anti-dilution clause, what happens if there's a pro rata participation, what happens if there's a liquidation preference changes. So you can kind of plug all these numbers and see what happens to everybody's equity in the process. So that's one product that we have
But can I say
for
something?
founders.
So when I taught, so probably for the past 30 years, I keep open an Excel spreadsheet that says pre-money valuation, size of the round, post, dilution to insiders. So I'm like always playing with these numbers as I'm on the phone with people all day about that. But when I taught a class at Chapman University on venture capital, on my first class, giving them a bit of a talk through, I have this Excel spreadsheet I call the journey of the founder. And I say, let's imagine we've got two founders, just two of you, and we found this company together. We're 50-50. Now let's go through the first outside funding round. And I show what kind of dilution. I talk about safes and convertible notes and stuff. And then, but the spreadsheet has like three scenarios. And so I play around with a little bit of those scenarios. Then I use them with my founders. I think founders often make the crucial mistake of trying to raise money at too high a valuation. And their big Sand Hill Road VCs are trying to hold the marks, like hold the front line on these valuations. And I say, look at what happens when you just raise, let's just get a quick 10 million in the door. Let's get a quick 2 million in the door. Look at what happens downstream on a blended rate. But my spreadsheet is just looking at only those key elements. I have a little bit of secondary built into it to show some stuff, but you're adding a whole layer of like 3D, 4D, 5D chessboard when you're enabling the founder to play around with participating preferred or non-participating liquidation preferences and stuff like that.
Yeah, man. So I think the challenge is you take very simple example of a company raising on a 2 million pre-money safe. Okay, let's just play with the numbers here. and then they raise some capital on a 6 million post money safe. So now you have pre money safe and post money safe. Okay, and then they go take a bridge down on a convertible note at a different cap with a discount and interest rate. So there's no spreadsheet in the world that can actually now model out a Series A. You can That does not exist because I've
It's
gone
like
hunting
circular
for it.
references. It's like circular references in the Excel.
Absolutely, your Mac is going to die instantly, and you have to go restart this. So the power of putting all this logic on an Amazon cloud instance is we have the power of processor to do all the compute within a fraction of a second.
Okay, that's hilarious. Okay, so from the founder, so from a strategy perspective, as the founder of a startup entering this exciting industry here, you've decided other companies are trying to make money by charging the startup to do kind of cap table management, as it was called even 25 years ago. I remember the first like cap linked guys coming out with this kind of stuff, data rooms, where your perspective is that if you are already the client of one of, if you're already the portfolio company of one of your clients, like 7BC that uses Zive AI to run the business, they just get it for free.
Yeah, just get it for free, and even otherwise, the price is like $1,000 per year. Uh,
If they're
Unlimited
not,
shareholders. Yeah, if they're not, yeah, it's $1,000 for the year. Unlimited shareholders. It doesn't matter how much you raise because the way we think about this is a very important part of a founder's journey. The
yeah.
cap table needs to be accurate. It has to be. They shouldn't be paying $10,000 to manage a cap table. It's just ridiculous. It's just at the end of the day, it's just a fancy spreadsheet, and they need to have the power to go model out different scenarios because they're always fundraising. They're trying to understand what is going to happen to their
And they make
ecosystem.
they make irreversible decisions on this. I think
Oh
that they
yeah.
like I have these like this one version of my spreadsheet. I have like three different scenarios of pre money size of round, and the dilution they're taking, and then I show them on a blended rate what it looks like from this, and frankly, I'm often just pushing on a brick wall. Like the door says pull, and I'm hitting push. That they still revert back to, yeah, I'm ready to burn this whole ship down by trying to go for
Yeah.
too big a valuation now.
Yeah.
Really dilution sensitive. This will probably impact legals too, because like sometimes founders think I'm kicking the can down on when I have to pay a big legal bill to Oric or Gunderson or Fenwick,
Right.
and they sign all these pre-money, post-money safes and convertible notes based on the preference of their angel or seed fund, side letter agreements. You hand that stack over to Oric, and don't be surprised you're paying $150 million for
Yep.
your bona fide triggering priced round on getting all that crap. And even the lawyers are making mistakes in their spreadsheets, I guarantee.
Oh yeah, dude. I've caught more than I don't know. Let me say like 40 plus spreadsheets by 40 different law firms. I've found mistakes in their spreadsheets, and I've given
Yeah,
them the feedback
we do
saying, "Okay,
too.
go
We do
fix it."
too.
Yeah.
We find the mistakes as well. It raises a question
Yeah.
of like, should I tell them
Yeah.
that they gave me $100 instead of $1 back?
Yeah.
But okay,
And
so
here is another interesting problem that I've run into. So there's a customer of mine. He raised let's assume that it was a $15 million cap safe note, and he was going to raise more money into that safe note, but that investor said they'll only invest in convertible note. So he
right.
said, okay, fine, let's do a 15 million cap convertible note. And then in his mind, it was equivalent. The post money save and convertible note were equivalent. And he then went about and raised more capital in other rounds. And finally, when it came down to converting into the price round, the numbers didn't match.
Yes,
And he was
they're
all over the
different.
place.
One's
Yeah,
pre-money, the other one's post. The other thing is
exactly.
they might have even had an MFN. They might have had like a most favored nation
Yep.
clause in some kind of agreement that if you're doing like YC, you have MFN if you're any good, and most favored nation, which means if the company raises at a other more attractive terms. I mean, legally, what it says actually is that the issuer, the startup, will share that document on later financings with the guy who already invested, who had MFN, most favored nation, and it's up to the guy who already invested with MFN to decide, do I want to switch to those terms,
Right.
right?
Exactly. Yeah.
And it's kind of like a lot to stay on top of if you made a tiny investment into a seed round and it's all taken up all your time.
Yeah.
So back to what this means on the perspective of the founder is that they can pay a lot of money for a cap table management system, which is built in old technology, which is limited in what it enables you to do. This is either free because one of your VCs is already using Zive,
Yeah.
or you're saying if they're not on Zive, you'll take them on for $1,000, and you're excited to be having everybody's be able to build this data set over time.
Yeah, that's correct. It's $1,000 for the year is how we are pricing it. So again, we're not trying to monetize the cap table product. We feel pretty good about the quality of it. At the end of the day, what we really want is also make the founders be responsible with respect to how they're presenting their data to potential VCs. Because for us,
Yeah.
we at Zive, we really care for the VCs. Like we don't want Andrew to look at a cap table that looks super complicated, and you have an assumption for what the cap table would look like when your investment in the safe or convertible note converts. So we want to make sure that the VCs are also completely protected from a rogue spreadsheet that might be presented to them. So
Yeah.
we think in those terms.
I mean, the world I've lived in my whole life is the pro forma cap table and the current cap table. And the pro forma cap table should have little bars I can slide around to get to the IRRs
Right.
that I want to deliver. And
Right.
does it make sense for my future decisions? So the whole idea of having sliding bars and everything, so much better than existing cap table, pro forma cap table. Um, okay. And so let's talk a little bit about privacy. There's been issues of privacy of, you're sharing very sensitive data with people. What
Yep.
what policies have you come up with so that founders, GPs, and LPs trust Zive AI?
Yeah. So we are a SOC 2, Type 2, and GDPR compliant solution. So we are completely certified, meaning access to the data itself is protected. Like even I myself don't have access to the data of my customers. For us, every customer is a silo. So everything kind of sits inside a box that only the admins within that entity can get access to, unless they invite me to their instance for me to look at. And from that standpoint, the data is protected. Only the admins get to see whatever is happening within their instance. It could be the cap table side, it could be the fund admin side. Now we are getting into the mode of having LPs wanting to discover GPs. So meaning LPs want to discover VCs to invest in their current fund or co-invest in an existing deal or to invest in a future deal. So now we monetize that relationship. So the LPs are coming to us saying, okay, you seem to have all the awesome emerging fund managers. Can you make an introduction? So we like to invest in these funds. When that conversation happens, then I find out what their thesis is. Okay, if they're investing in AI type of VC funds or health tech VC funds, we know who those VCs are on our platform. So we go to these VCs and tell them, okay, would you be interested in having a conversation with this particular LP? And then that introduction happens. So for us on our platform, it is completely owned by whoever is running the VC fund to decide whether they want to share the data or not, and they can also get to select what information they want to share. So obviously they don't want to share information about other LPs on the platform. We give you very fine control on which pieces you want to expose, and that is another capability that's already built in.
Yeah, and I've seen this. I mean, there's a check mark. Uncheck that, allow check this to share it. It's
Right.
pretty cool.
Yeah.
And in the old world, there's like two GPs, and you're like, "What did you show them?" You're like, "Don't even ask. I have no idea. This happened. I've been in 18 Zooms today already. I have no idea what even happened there."
Right.
Well, that it's pretty awesome. Well, listen, Rajesh, what else should LPs, VCs, and founders know about Zive AI right now?
I think we are at a very interesting spot. So we just crossed $700 million of assets on the platform in the last 8 months of going live. We have done all this with zero marketing. So the beauty of that is that when we talk to a fund manager like yourself, the problem that you guys are facing from a compliance and risk of your fund is really high, that it just became it's just very easy for us to kind of switch these fund managers over to Zive. So we've been kind of onboarding a new fund once a week, one a week at least right now with zero marketing. We have a strong pipeline of more than $1.5 billion of VC funds that are evaluating our platform in some capacity. With the investment coming from yourself, Andrew, and totally appreciate your trust and support. And with SetaCap Ventures, and we also have investments from a bunch of other VCs like who are also customers. So they come in, they look at the platform, they say, hey, can I invest in your company? So they've also been writing a bunch of small checks. So together, I think we feel confident that we are in a position to completely disrupt the space, make it very compliant, reduce risk, minimize cost to all the participants, and make it easy for VCs to raise capital from LPs, for LPs to evaluate different VCs, make it easy for even startup founders to raise capital either directly from VCs who are investing in a particular stage that the portfolio company is at, or get for the VCs to find LPs to co-invest with them. So at the end of the day, like what we think of Zive is that okay, this is going to be a platform where there's going to be a lot of capital introduction, capital flow, capital connect that's going to happen. So that's really where we're taking this company to.
Yeah, I mean, it's been fun getting to know you over a year now. This is really like a venture capital designed product. There's even, if you're a VC, tell me if you've ever heard this has ever happened to you. You're sending emails out to your portfolio companies trying to get them to give you information that's beyond just the revenue and share price. And Zive even lets you like create a form and like send it out, and then that data is captured. So the ability to streamline the flow of information between general partner and their portfolio for a single cohort fund and those LPs, it's somewhat dreamlike. So I guess I would say call to action or full disclosure. So 7BC Venture Capital, we co-led the last financing round for Zive AI. So we're all in and super excited. Our pipeline of VCs we can bring this company is like more than enough to buy Brazil. So it's a really big number. And so we want to get VCs that are, you know, the guy like me who has to deal with this painful stuff to take a demo with Zive AI and start onboarding your information. They even have APIs into a lot of the systems you already use. So it can be very, very automated and start playing around with it. So let's onboard a bunch of VCs and then we'll eventually sign up, you know, all their portfolio companies, and the LPs when they touch it, you know, they really, I think the days of investing in a VC fund that's not using artificial intelligence to do all these blue checks of 200 different checks, you probably should not trust the numbers that they're showing you.
Right.
And you won't be able to judge it until the DPI is done and you measure yourself what you wired in and what you got back. And even then your slide rule is probably not as good as the artificial intelligence tech to measure any of the stuff. So unfortunately, the business is a little complicated. The good news is technology is naturally progressing to where we want it. So Rajesh, I'll put stuff in the show notes, but what information can we give out for people to get in touch with you?
Just Rajesh at Zive.ai. That's my email. I'm on email and LinkedIn, so super easy to get hold of me, and I'll be super prompt in responding.
Okay, and Zive is like the number 5, Zive.ai.
That's correct. Zive.ai.
Okay, Rajesh. Okay, wonderful. Okay, man. Awesome.
All right.
Thanks so much
All right,
for coming on. Bye for now. See you in a couple hours.
Bye.